Okay, welcome back to another episode of Slow Growth Investing. This is the February update. So we'll go through the portfolio, what I bought, and then what dividends I received. So without further ado, let's go ahead and just jump in. So I'm not going to use the spreadsheet anymore because it was just too finicky. Like there was a lot of stuff that would just break randomly. So I'm just going to move away from that and we'll just stick to actually seeing what we received. So let's go ahead from here. Let's just go up a little bit. Let's go into my activity. I'm just going to sort this by trading only. So you can see in the month of February, buys. So February 4th, 3 buys. Harmony, Vici, Realty, and most of them are into those things just because those were what my underweighted things were. So if we go back into the portfolio, or actually I guess we could just go into the holdings. We can see every single thing. Let's go by value is fine. And then you can see that Microsoft was super low. You can see a new one here, Dutch Bros, which we'll talk about in a second. Harmony, it's still relatively low, but everything else is just a little bit ahead. So it's been cycling a lot of money into Harmony, but it'll start probably cycling things into this. So I'm just letting M1 do its thing. But you can see Dutch Bros is a new one. And then I believe S&P Global is also a new one. Now there's two big narratives around like software stocks right now. First and foremost, S&P pays a dividend. So if the downtrend continues for this, which I mean, I'm up a little bit, granted it's a small amount, but up a little bit on that. I'm still getting paid a dividend while I wait, and a lot of the stuff that people think AI will interfere with, at least for S&P Global, it's really not a big deal because all that stuff that they have is all of their own information. AI doesn't have access to that, so I don't think that's really a big deal. They're steadily growing their revenue. I don't think this is a big issue. Dutch Bros. I like Dutch Bros because they're very heavily expanding to be like a big competitor with Starbucks, and I think they just have a better grasp on their customers than Starbucks does. I also believe that people kind of like them more than Starbucks. I think the sentiment is better. It's kind of like the cooler place to be than Starbucks. Starbucks just feels like overpriced whatever right now. My biggest holding still remains MPLX, followed behind MasterCard. I really like MasterCard. I'm not scared about this at all. So I'm going to keep working on this being a bigger position as well as Visa while they are trading down. Harmony took a big dip, but it is what it is. Let's go ahead and go into activity, and then let's go ahead and do just dividends. So we got 5 dividends from February. We got 38 cents from MasterCard, 18 cents from Realty Income, 53 cents from Costco, which I think that's my first Costco one, $30 from MPLX, which that's a pretty big one. I'm working on getting that one bigger as well, and then 58 cents from ASML. You can see we already got one from Visa as well at the beginning of this month, but we'll get into that at the update next month. So a pretty decent month. I do want to show you if we actually go into the portfolio again, or maybe into holdings, we can see what the projected dividend income is. So 165 bucks. We've earned 48 this year so far, and then 117 more to go, I believe. So I don't think this takes any like reinvestment into account, but we will start to see what this number ends up being. If it could be like 500 bucks by the end of the day, that'd be pretty cool. Now, if we dip into Robinhood, you can see that the Honest Company is my only portfolio, or the only stock in this portfolio over here. I was down quite a bit. I'm definitely even now with the calls I've sold. So I have 221 shares. I almost bought 80 more shares while I was on the dip, maybe like right here, and I wish I did. But I thought, you know what, I have too much. But you can see it's gotten quite a bit back up. So those calls that I have expire, I think May 15th. So I'm just going to ride this out. If they sell, they sell. I double my money. If they don't, whatever. I think it'll be a good company long term. They missed on their revenue pretty heavily. If we scroll down here, they missed significantly, but that's because they entered or exited a lot of segments. They're still profitable. They still have a ton of money, and they're doing, I think, a lot of share buybacks, if I'm not mistaken. So Honest is going to be one for the long term. Now, if you notice something, I did sell Netflix. Now, the reason I sold Netflix after last month saying that I was happy with all the positions I have is because I was looking forward to them acquiring Warner Brothers and being able to distribute all that extra media, and I thought that was going to be really good long term. However, Paramount took that deal, and Netflix shares upon that, I think they went up like 12% on the day, and I was up however much percent, so I just sold it and reinvested in the other stuff. One, it doesn't pay a dividend, so I'm not getting paid to wait, which is whatever. I mean, you could always, sell if you need to. But I do like to get paid to wait. That's part of dividends investing. And another one is I don't pay for the service anymore, and I haven't for a couple months. So, I mean, I don't really I don't care, So that's that. Now, tracker dividends. This is projecting 160, so it's just about what M1 is projecting. 2.5% yield on cost. And then I just like to look at this just because it tells me the actual dividend income. I can just look this up on my phone instead of having to be on the computer. But again, the plan for the next month is let M1 kind of do what it's doing, but like if I get my tax return back this month, I'm going to try to invest that into whatever I'm kind of lowest in, MasterCard maybe, and just try to build this kind of dividend snowball and see where we're at. So that's basically it for this month. Hopefully next month we can be maybe closer to like the $200 per year mark and then just keep building that. So if you checked in, thank you, and we'll see you again on the next one.